Welcome to the deep dive. Today we're plunging right into the world of cryptocurrency. It's been pretty tumultuous lately and definitely fascinating.
Absolutely.
We've got a really interesting mix of sources you sent over, everything from big financial news sites to, well, user forums.
Right. It's quite the range.
And our mission really is to cut through all that noise. We
Hmm.
want to pull out the key insights and give you a clear, concise picture of what's actually shaping things.
Mm.
We'll hit the big stuff, those crazy price swings we always see, some surprising moves by institutions getting involved, new ways companies are using crypto.
Yeah, some really novel approaches there.
And, well, we also have to touch on a major scandal, one that really put a spotlight on the, let's say, darker side of the industry.
Yeah, definitely can't ignore that one.
So the big question we're sort of wrestling with is this market finally growing up? Is it finding its place in finance? Or are the risks still, the main story? Let's get into it.
Exactly. That's what this deep dive is for, really.
Ah.
To distill what actually matters from all these different angles.
Hmm.
Show you what it might mean for, the wider financial world.
Okay.
Basically, give you a shortcut to being clued in without drowning in information. You should walk away with the key takeaways, not just noise.
All right, let's kick things off with the big one. Bitcoin. It recently had this just incredible high, didn't it? Rocketing up to $124,000.
Yeah, staggered number.
I mean, it blew past its old record. You could almost feel Wall Street getting those starry eyes again.
Yeah.
But, this is crypto. Was that surge built to last, or did that classic volatility just smack it down again?
Well, that's the crux of it, isn't it?
Mm.
What's really interesting is how fast it reacted to the wider economy.
Okay.
Bitcoin was touted by some as this, like inflation hedge, digital gold.
Right.
But almost right after that peak, inflation worries basically punched it right back to earth.
Wow.
So it suggests, it's not just its own little world anymore. It's getting tied into the global system, affected by the same stuff as traditional markets. Kind of challenges that whole digital gold idea.
Yeah, that makes sense.
We saw reports on this everywhere, too. The Verge, Reuters, Times of India,
Yeah.
they all picked up on it.
A real wake-up call that the real world still calls the shots, huh?
Pretty much. Moonshots feel epic, but markets stay real.
So while Bitcoin was wrestling with that, Ether was doing its own thing. It had a remarkable climb, too, almost hit $4,800.
That's right, yeah.
What was driving that? Was it just the usual retail excitement or something else this time?
Oh, good question. Because this time the fuel felt different. It wasn't just individuals jumping in.
Yeah.
It was institutional demand. Big money.
Hmm.
Hedge funds, asset managers, even some public companies getting involved, often through things like ETFs or just buying it directly for their treasuries.
Right. The ETFs are a big deal.
Exactly. And this institutional push for Ether, it's not just about prices. It hints at something deeper, like a bet on the actual technology, the smart contracts, the DeFi infrastructure.
Okay, so less pure speculation, more utility.
Kind of looks that way, yeah.
Yeah.
Like a longer-term play on enterprise adoption, not just quick trades.
Yeah.
We saw mentions of BitMine and SharpLink piling in, for example.
Gotcha. And the sources mentioning this were pretty diverse, too. Reddit, FT, Axios.
Yeah, widespread observation.
So that institutional angle feels significant. And it leads us to another, maybe even weirder trend. Companies treating Bitcoin like, well, treasure, but without the pirates.
Huh. Yeah, you could put it that way.
We're hearing about these Bitcoin treasury companies. What's that about?
Well, essentially, these are companies using totally normal financial tools like issuing debt or doing IPOs,
Okay.
specifically to raise cash to buy and just hold Bitcoin on their balance sheets, like a strategic reserve,
So not trading it, just hoarding it.
pretty much, like a country holding gold reserves, but with BTC. It's a whole different mindset, a long-term strategic move, not day trading.
And the Financial Times pointed out a really wild example, right? Something about Trump-linked media.
Yeah, a huge $2 billion haul apparently raised or allocated for Bitcoin. It just shows how diverse the players are getting.
Mm.
Even companies you wouldn't immediately associate with crypto are seeing it as a strategic asset they can get into using traditional finance methods.
It really is wild. That signals a pretty broad acceptance, doesn't it? Even if it's just about stacking assets.
It certainly suggests that, yeah. And speaking of unconventional finance moves,
Hmm.
Peter Thiel's crypto exchange, bullish. That IPO was something else.
Oh, yeah, that wasn't the usual drawn-out IPO drama, was it?
Not at all.
It felt like they just ripped up the playbook, dropped straight onto the NYSE, and boom, grabbed $1.1 billion.
Exactly. No long roadshow, just straight in. Big splash.
But what happened next? Did it just settle down like a normal stock?
Not exactly. That's the interesting part. The volatility after it listed.
Okay.
Well, the FT had this great line. They called it like crypto speed dating.
Huh. Oh, okay, I can picture that.
Yeah, intense excitement, quick connection, then whoosh onto the next wild swing. Very different from how most IPOs behave after listing.
Right. They usually find some kind of level.
Mm-hmm. But bullish. It showed those rapid, almost dizzying price moves you usually see in, well, crypto itself. It was like traditional finance met crypto's wild side.
That crypto speed dating really captures it. But doesn't that kind of volatility in a public company, doesn't that risk scaring off investors who want that regulated stability?
That's a really important point. It signals that even when crypto businesses enter the mainstream markets, they don't necessarily leave their volatility behind.
Hmm.
So investors are faced with this new kind of hybrid risk. It definitely raises questions about how much traditional finance can really tame crypto.
Yeah, a sort of clash of cultures.
You could say that. And, well, that brings us to the really sobering part of the story. We have to talk about the scandal that really shook things up.
Ah, yes. A very stark pivot from all the hype and, the hyper meme mania, as some called it. Do Kwon's guilty plea, that felt like a cold shower.
It really did. A massive reality check.
I mean, the number, $40 billion just gone. That's almost hard to comprehend. What does a collapse like that tell us about the risks still floating around?
Well, it raises huge questions about accountability, doesn't it?
Mhm.
And the sheer scale of risk in areas with less oversight.
Definitely.
So, Duquan admitted fraud related to the Terra USD collapse.
Yep.
That was supposed to be a stable coin pegged to the dollar.
Right, an algorithmic one.
Exactly. And it just spectacularly failed, lost its peg, and the fallout wiped out yet an estimated $40 billion from investors. Just evaporated.
Unbelievable.
His sentencing is coming up in December, I believe.
Okay.
And the whole mess just threw this incredibly harsh spotlight on crypto's dark side.
Yeah.
It showed how devastating things can be when you have bad actors and, frankly, not enough guardrails. It highlights the fragility that still exists alongside the innovation.
So, after covering all of this, where does that leave you, our listener? We've gone through quite a journey here.
We really have.
From Bitcoin hitting those incredible highs, but then getting knocked back by the economy, to Ether's rise being fueled by serious institutional money, these new Bitcoin treasury companies playing a long game.
Right, the strategic plays.
The wild ride of the bullish IPO, and then bam, the sobering reality of the Terra Luna collapse and the Do Kwon fraud.
Yeah, the full spectrum.
You've basically got a snapshot now of a space that's moving incredibly fast, full of contradictions, really.
And as you piece all that together, the dramatic peaks, the painful valleys, the way crypto's getting tangled up with traditional finance.
Yeah.
Here's maybe a final thought to chew on. Is this digital frontier actually maturing? Is it finding real stability? Or are the risks just sort of shifting shape? What does all this mean for the future, for regulation, for stability, and maybe most importantly, for trust? That's really the big question for you to ponder as this all keeps evolving.